heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde is off today. This is Bloomberg Technology. Coming up on the program, Tesla's shock change of CFO. Zach Kirkhorn has stepped down after 13 years at the EV maker. Meanwhile, Elon Musk's health is in focus as talk of a Zuckerberg cage fight heats up. And plugging a $48 billion black hole, artificial intelligence could fuel a rebound at SoftBank as the Japanese conglomerate's Vision Fund seeks to snap 5 quarters of losses. And we go live to Lisbon as a key leader responds to Portugal's probe into a European telecoms giant, Altice. First, let's get a quick check on the markets. Look at the index level, NASDAQ 100, very tech-heavy. We're basically flat, up 0.4%. Earnings is kind of a pull on that. The Tesla news sees Tesla's declines accelerating and dragging down. We'll get to that in just a minute. The yield on US 10-year Treasury is interesting. We are below 4.2%, but that has been the story. The sell-off in bonds, the push higher in yields, and its impact on the equity market. 2 single names that I'm flagging. Apple, down for a 5th consecutive day. That's the longest streak of declines going back to December. We had earnings last Thursday. Now we're worried about the smartphone market in the US. Later in the show, we're going to bring you details of the iPhone 15 with Mark Gurman. He wrote about that over the weekend. Palantir, down 5%, earnings after the bell. This is a stock that's gained more than 130% since its last earnings report. The street expecting just 1 cent of earnings per share. We'll see if AI is boosting the bottom line. The name we are watching so closely, the surprise story this Monday that we all woke up to. Zach Kirkhorn stepped down August 4th as Tesla's CFO. You see the declines have accelerated, down 3% on Tesla. He's been at the company 13 years. He became CFO early 2019. He is a big factor behind the profit at Tesla, some of the key capital raises they have done. The chief accounting officer is going to transition into the CFO role. Kirkhorn's going to stay till the end of the year to oversee that transition. Pierre Ferragu of New Street Research currently has a buy rating on Tesla and joins us to discuss. Pierre, your reaction to Zach stepping down?
Well, very selfishly, and as an analyst covering Tesla, I'm very disappointed because Zach was like an exceptionally helpful CFO for analysts, always very impressive in his ability to provide like a big picture and drill into very specific numbers he could give to give a good sense of what was happening. So the sense of control and understanding of how like the big Tesla machine works at Tesla was impressive, and I'm definitely going to miss it. It's also definitely a surprise. I was not expecting him to leave. He's very young. Now, as you said, 13 years as Tesla, 4 years as a CFO, still very young. A lot of things he can do with his life, and quite a good, amount of money in his on his bank account, because of course, being the CFO of Tesla and going through such like an exceptionally strong stock performance means Zach already got paid very well for his time as Tesla. It reminds me, when Jerome left Tesla, it was the same thing. It's Tesla is a company that attracts talents the best in the world. Remember, they receive 3 million applications a year. It's also the company that has the most difficulties to retain them in the long run, because that's a company that is making talents very rich very rapidly at the same time. So yes, I think it's part of the model.
So Tesla's named Vaibhav Taneja as the next CFO. He's been the chief accounting officer. Do you know anything about him?
No, I don't have the chance to meet him personally. You know that Tesla is very protective with the time of their executives. So I had the opportunity to speak to Zach regularly, not so much to Vaibhav. He's basically coming from the ranks of Tesla. I'm very confident he will do a great job, and I hope I will forget very soon my regrets of seeing Zach leaving, and I'm sure Vaibhav will be very helpful with analysts as well.
Pierre, you and I on this program, Bloomberg Technology, have used and talked about the term key man risk. And the thing that we talk about in the context of Zach was that he was one of just a handful of stated executive officers, right? You have Drew Baglino leading the powertrain and battery business. Tom Zhu has now come in over from China. But does the key man risk conversation now get amplified because Zach, who's been such a stable force, is now gone?
It's a very good question. So key man risk, yes, you can't ignore that. A CFO leaves a company, the stock comes down. You can't that makes complete sense. There is like an optionality, a risk reflected in a move like that. You never know exactly what's behind it. And yes, a CFO, and especially a CFO with the talent of Zach, is a key man in an organization like that. Now, if you take a step back and look at how Elon Musk likes to manage the multiple businesses he has, he likes to be directly speaking to very technical people, so people like Drew typically. Then he likes to have a type of either a CFO or a chief operating officer who is in charge of running the shop. And that's the model of SpaceX. That's the model more or less of Tesla, with like no real COO, but like a Zach and potentially Tom running the business from a financial and operational and commercial perspective. And so that model, once again, is extremely resilient as long as you have this capability of harnessing talents and bringing them up the pyramid. And look at someone like Tom, like the trajectory in China at Tesla. It's very similar to the trajectory of Zach in the finance department. Like, these people came in very highly selected by Tesla, and amongst all these very high quality talents Tesla has, Tesla is extremely good at promoting very, very fast, very young talents. So as long as that machine is there, as an analyst looking at the stock, looking at the long term, even the medium term, I feel that the key man risk is what it is. We'll see, in the next few months, couple of quarters, if there is anything more to know about the situation. But I feel relatively confident we shouldn't be excessively.
Pierre Ferragu, New Street Research, always grateful for your time and your reaction to what was a surprise piece of news this morning. Thank you. Let's stick with Musk. Over the weekend, Elon posted on X, formerly known as Twitter, that he's going to have an MRI of his neck and upper back, and he's going to find out whether or not he'll need surgery. This, of course, ahead of a proposed cage fight with Meta's co-founder, Mark Zuckerberg. Joining me out of DC, Bloomberg's Jackie Davalos. You and I have been through all of the posts, all of the timelines, all of the ideas. What do we know is the latest about this proposed cage fight?
Well, Ed, we know that a cage fight is still up in the air, so our eager audience out there shouldn't put their bets in just yet. But what we do know is that Elon Musk sort of put the kibosh on what seemed to be an advancement in a proposed match between the two tech billionaires because of his injury to his upper neck and to his neck and upper back. Now, it seemed to be escalating earlier in the day because when Elon Musk first posted that Sunday that the match should be live streamed on X and that these proceeds would be going to charity, Mark Zuckerberg actually responded to that and said, hey, look, I suggested that we have this on August 26th, haven't heard back. And so a physical match may not be playing out, but they're certainly throwing punches at each other on their respective platforms already.
You and I cover technology, and the platforms are at the heart of this. You mentioned Zuckerberg's response, Threads being more reliable. Outside of the tech, what do we know about the training that's going on? Like, is this real, Jackie? Are they really gearing up for this fight?
Well, they've both been posting pictures of them training. We saw that post that Mark Zuckerberg had of him with this really heavy vest that he was bragging about how fast he could do this particular training session. I mean, they're really putting themselves out there in this way that, at least for Zuckerberg, it's a little uncharacteristic of him. For Elon Musk, not so much. But, at the end of the day, this isn't really about a cage match. I think what a lot of tech watchers out there realize is that the competition between the two really has intensified because of this tit for tat about the social platforms themselves. And so I think this is a culmination, probably a much more entertaining one that we normally see play out, but certainly one that's still a little bit up in the air.
Bloomberg's Jackie Davalos, everything about the Octagon out of DC. Thank you very much. Now, look, we spent the last couple of weeks talking about the rebranding of Twitter to X. But what does Martin Grasser, the co-designer of Twitter's original iconic bluebird logo, have to say about the change? Have a listen to this.
I think with the letter form itself, it's a tough solve that they have to come up with because it's angular and sharp. It has an aggressive construction. And so I think the challenge that they'll have is how to define what X means, how to make it feel welcoming and approachable in its own way. And it's an incredible opportunity to have a single letter domain. I think there is only a few of them in the world, and they really get a chance to sort of say, define a letter in the alphabet the same way, people think about the bird today. I think, 10 years ago, there wasn't this emotional attachment to the bird that we see as it starts to, pull away and change to X.
Coming up here on Bloomberg Technology, check a look at Zoom shares. We've been talking and asking, is this the end of the remote work era? When the darling of the remote work era says to its staff, time to come back to the office, it's time to have a conversation. Those shares down 1%. That next, this is Bloomberg. Another piece of news that we're tracking here on Bloomberg Technology. PayPal is launching a stablecoin, the latest crypto payments push. What's so interesting about this? It's the first by a large financial company and is significant. Joining us now, who else? Bloomberg's Sonali Basak. Sonali, PayPal is like the OG name in payments. And then you follow in the modern era discussion around crypto. I'm not so surprised by this, but it is a significant piece of news.
Oh, absolutely. You and I talk about the PayPal mafia all the time, everyone from Elon Musk to Max Levchin. And so it's not surprising to see PayPal be the first to really come out and make a stablecoin announcement. They are also working with Paxos, which we know has been kind of a longer standing stablecoin issuer and is regulated pretty heavily here in the United States, including with the New York Department of Financial Services. So if they're trying to get something off the ground, to do it in a way that is already regulated, well known by the regulators, it makes a lot of sense, especially because, Ed, if you think about the way that stablecoins are used kind of as an on-ramp, off-ramp, and kind of also here on the eve of the House Financial Services Committee really trying to proceed with a new bill here for stablecoin legislation. So a lot of movement on that front, very unclear what the end game is. But as we know, PayPal has 430 million users here that are ripe for the taking when you think about the movement over to digital payments.
So the basics of stablecoins, a crypto token that's pegged to a real asset like the dollar, the US dollar. Is that the case with PayPal stablecoin? What are the specifics of it?
Yeah, it's fully backed by U.S. dollar deposits, treasuries, cash equivalents. I think it will be interesting to see how that works over time and who else they work with. I think about what Circle has done, for example. And Circle also has used BlackRock to manage that kind of treasury of cash and cash equivalents. As we've seen over time, that has been a very interesting thing to even look under the hood, because initially they had kept money at Silicon Valley Bank. Silicon Valley Bank had failed. They worked more with BlackRock to figure out how to move some of that money. So to the point that you're making, the linkages here to the U.S. financial system will be interesting to keep an eye on continuously. And again, the partners that they have. The other reason I think about Circle so heavily is because of the way that Coinbase, for example, uses Circle and USDC to really manage their kind of cash holdings here as almost a proxy, given that it's backed so much by very stable, liquid U.S. dollars and treasuries. The expansion of how PayPal works with the existing crypto ecosystem in that way. How much can you use PayPal stablecoin, given that it is backed kind of just by treasuries and cash? Will more companies like a Coinbase feel comfort in doing that and work with PayPal in the future at a greater scale is a pivotal question.
Well, quickly, we just showed a fantastic chart. Mr. Director, bring it back up. There you go. You look at the market for stablecoin. It is clearly dominated by one name, Sonali. Very quickly, break down the market for us.
Yeah, very clearly, Tether is a big part of the stablecoin market. And I think you have to look at this, Ed, because 21% is USDC as well. How much are people using stablecoins inside of the United States versus outside of the United States? PayPal is still a U.S. domiciled company. And so there is a rationale for them to be working with Paxos. We've seen issues with other stablecoins through Paxos like Binance. And so, but Paxos, again, has been a very trusted issuer in the United States, with a lot of U.S. adoption in particular.
Bloomberg, Sonali Basak, all things crypto out of New York. All right, so the push to get tech workers back in the office continues. This time, the back to office announcement coming from the darling of the work from home era, Zoom. To discuss, Bloomberg's Brody Ford here with us. This was one I did not see coming. What is Zoom saying?
Yeah, Zoom said pretty much what everybody else has said, which is we're going to work better in the office. Come back in 2 days a week. It'll be great. See your colleagues. And what's kind of funny about that to a lot of people is, right, that Zoom facilitated work from home. Without them, we'd probably all be using Skype. But yeah, I think what's interesting here, though, is that Zoom will say that this actually aligns pretty closely with our current strategy. They recognize that a lot of companies are going back at least part-time, and so they've really worked on developing software for in-office collaboration, hybrid. And so they figure to make these tools, it makes more sense for their workers, too, to be in the office at least part of the time.
The reality of this story, Brody, as you've written about, is that in the post-pandemic world, Zoom's really struggled to keep its pace of growth. Tell me about the reasons why.
Absolutely. Well, most tech companies ended up peaking around late 2021. Zoom peaked a full year earlier in October 2020 because there was just this elation when everybody said we're working from home forever. We have companies all over the place. I mean, Salesforce said we're never going back to the office. And it became clear that some of these old ways of working will creep back. And that's really what's dented Zoom. I mean, they have a fantastic single product. Most people will say it's better than the competition, but it's hard to make a successful platform company on one product, especially when most people who want that product have already purchased it.
Let's be clear about the CEO, Eric Yuan's position on this, though. He still believes in hybrid working.
Yeah, and that's what's interesting. I think a lot of companies that are increasingly pushing workers back to the office will say, we're staying hybrid. The question is whether that number continues to creep up, right? Does it start at 2 and then next year it's 3, next year it's 4? Are we in a 3 days a week white collar work world forever? If you look at finance, obviously, some places are 5 days a week. Even sales positions at a lot of tech companies are getting to 4 days a week now. So the question is whether it stabilizes hybrid or it's just going to continue creeping back to the old ways.
Brody Ford coming to us live from an office, our office in New York City.
Thank you.
I mean, are there any other tech companies that you cover that are taking a similar approach, that have recalled staff in recent weeks?
Well, here's an interesting one. Amazon, because a lot of tech companies have said, hey, if you live near an office, you have to go. Because a lot of hiring was totally remote in the pandemic. Amazon took a step to say that if you don't live near an office, you got to move. You got to come back. And to me, that was an unprecedented step within the big tech companies. Again, if you look at finance or others, my guess is it's been a little bit harder for a while now.
Bloomberg's Brody Ford, always good to catch up. Thank you out in New York. Coming up here on Bloomberg Technology, a French-Israeli billionaire publicly addressing criminal corruption allegations against his telecommunications company for the first time. We're going to bring you those details next. We're also keeping a close eye on shares of Palantir, reporting earnings after the bell. The story has been around artificial intelligence. They're offering, it's a stock that's jumped more than 130% since the last earnings report. But there is some skepticism out there in the market that they're going to have to start showing tangible evidence that the hype around AI is actually translating to sales. The street seeing just 1 single cent of earnings per share after the bell. We'll track it. This is Bloomberg. Altice's Patrick Drahi said he felt, quote, betrayed and deceived by a small group of individuals, including one of his oldest colleagues. This was in response to a criminal corruption probe in Portugal focused on key figures connected to his telecommunications empire. Here with the latest out of Lisbon, Bloomberg's Enrique Almeida. So let's go back to the beginning. How did some Altice officials become caught up in a Portuguese probe about the company?
Hi, Ed. Well, this all began last month when Portuguese police searched about 90 homes and offices in Portugal and later detained the co-founder of Altice, Armando Pereira, and 3 other people for questioning. Now, prosecutors believe that Pereira and a close group of people rigged procurement contracts at Altice Portugal in a way that harmed the group's own companies for their own benefit. Pereira is considered Drahi's right-hand man, which has raised fears that such practices could be taking place in other countries where the group operates. The irony of this all is that Altice has earned a name for itself here in Portugal for cutting costs. A union leader told me last month that when Altice bought Portugal Telecom, the country's biggest telecom company, Pereira told unions that he had to cut about 5,000 jobs. That's about half of the workforce. Now, he's suspected, along with a group of other people, of allegedly setting up businesses that once supplied contracts from Altice to line up his pockets.
Altice in Europe is just a telecoms giant now, right? The question is, Enrique, what happens if this escalates beyond Portugal to other European countries or even the US?
Well, that's the key question here. Altice has alleged to be a victim of foul play and that the case, for now, is limited to Portugal. But the fact that one of its co-founders is under house arrest has raised concerns of poor governance elsewhere, and the investigation could indeed spread to other countries where it operates, like France or the US. One alarm bell has been the dismissal of Altice USA Chief Procurement Officer Yossi Benchertrit, who is Pereira's son-in-law. Yossi and his wife Gael made headlines in 2002 for buying a $70 million apartment in Manhattan. Now, if authorities in the US get involved, Altice could face potential fines for poor governance, but the biggest concern for now is Altice's huge debt pile. The company's debt has ballooned to more than $60 million after years of aggressive acquisition. At the same time, debts are getting more expensive. Yep.
No, I'm sorry to cut you off. We're short on time, Enrique, but thank you for your on-the-ground reporting out of Lisbon. We'll continue to track the story. Coming up here on Bloomberg Technology, a rebound for SoftBank. Why analysts expect the Japanese company's Vision Fund unit to report a modest profit after 5 quarters of losses. That is a big name that we're watching out of Japan. We'll have that next here on Bloomberg Technology. From San Francisco, this is Bloomberg. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. A quick check on the markets. Not much action happening at the index level. NASDAQ 100 up 0.4%. We started the week with losses in treasuries, yields kind of pushing higher. The 10-year below 4.2%, but that has been the broader narrative. Earnings is still a big factor. Apple is down for a 5th straight day, longest streak of declines since December following its earnings print. You also see names like Palantir down 5% ahead of earnings coming after market. The single name that I'm watching, though, halfway through the program, SoftBank in Japan. You look at the parent group, SoftBank Group, down 0.9%, but kind of pared its losses. We get their earnings very late night West Coast time, early hours of Tuesday morning East Coast time, all focus on Vision Fund. Expected to return to profitability after 5 quarters of losses in that Vision Fund. What's going to drive the rebound? Bloomberg's Isabel Lee with me now with the latest. Isabel, this is an artificial intelligence story.
It definitely is, Ed. And is it even a surprise? AI is really what's going to fuel the rally, or the soft rebound, rather, modest rebound, however you want to call it. But this is a big deal considering that the Soft Fund, Vision Fund, which is the venture capital arm of Soft Fund, have seen losses in the past 5 quarters or so to the tune of 48 billion. So this quarter, if it sees modest gains, it'll be good. And obviously it's driven by the AI rally. You've covered it in this show. AI rally has just fueled all indexes across the board. The NASDAQ 100 saw its biggest record ever from January to June. And the Vision funds public holding, it's kind of a big firm. Kind of is probably not the best word because it's 1.1 billion. It's public holdings as of the June quarter. And among the companies it invests in are DoorDash, Grab Holdings, which also saw double-digit gains this year. And it also has a stake in China's Didi Global. So they're really banking on that AI rally. And this is one of the concrete examples that it lifts the valuation of a fund higher.
The other story we're tracking so closely here on Bloomberg Technology is what happens to SoftBank's chip unit, ARM, the chip designer. We know that an IPO is likely in September, a month from now. We have a good gauge of the valuation. How big a factor is that?
A lot of it hinges on that, actually, because ARM is looking to raise around 10 billion for a valuation of around 60 to 70 billion. So that's pretty big. And if this happens, ARM's debut will be the biggest, following Alibaba and Meta. And you know that this has been a big story this year other than AI. It's been chips. Everything has been about chips. So SoftBank is really banking on this. And if it happens, it's going to be a big deal. For background, Vision Fund launched in 2017, and it has investments including Apple and Qualcomm. So if ARM comes true, if it does go public, which is a loss, by the way, to UK because they initially said they would list there, but now they filed confidentially in the US, it would be a win, probably, for SoftBank. Now, we don't know how much SoftBank will sell its stake when it comes to the IPO, but still, we must be guessing that it must be substantial.
Bloomberg's Isabel Lee, my good friend out in New York, across everything Asia tech and the importance for markets. Thank you very much. Now, up next, Ro is the all-in-one finance and investment management platform for businesses. It's now integrating artificial intelligence into its services. Ro unveiling one-click AP to help input data in seconds that would normally take finance teams hours. Joining us from New York is Ro CEO Everett Cook. This is interesting because what you're doing is at the heart of the debate of where AI disrupts. Does it aid jobs or does it displace jobs? But just start by explaining what your AI-powered tool does.
Thank you, Ed. It's great to be here. Absolutely. So Ro is an all-in-one finance platform. That means we combine products like banking, expense management, corporate cards, and accounts payable, which is our newest solution that we launched this week. We're infusing AI into all of our products, starting with AP, because we believe it contributes to a better user experience and ultimately takes people out of the tedium of manual data entry. For us, we don't believe that this is a job replacer. We believe that it frees up finance teams to ultimately be strategic and add value to the organizations that they work for.
How much of your decision to do this was driven by people just coming to you and saying, we need some help? We actually need AI to do something that's useful for us.
A lot. I mean, that conversation wasn't about AI, but it was about, the finance team spending up to 30% of their time entering data and processing payments in a very manual way, still today in 2022, 2023. So we understood these problems and we understood the technology shifts that were happening with AI. And for us, it seemed like a very logical solution to apply to solving this very pervasive and meaningful problem.
Your products and services are targeted at the CFO and the finance lead, the finance team. How do you assess their competence, their understanding of artificial intelligence? Are people out there trying to upskill as CFOs, learn more about AI and why it's important for them?
That's a great question. I think CFOs all around the world are trying to upskill all the time. I think what's important here, though, is that they don't necessarily need to truly learn about AI to reap the benefits of it. It's going to immerse itself in all of the products that they probably use. Us as a technology company, we're embedding it in so many products to just make everything much better for the end user. But I think that there are leading edge CFOs and finance teams are definitely learning as much as they can about this new technology.
Are you able to quantify the financial benefit of automating these functions? How much time, money does it save a company on average?
So we were able to reduce sort of the typical payment system, payment process, which includes interpreting, checking, validating, and scheduling a payable and managing that with any payment method, down from around 20 clicks to around 2. We call the product One Click AP. We're going to get it to 1. Because this is really important for those organizations. That may not sound like a lot, but you multiply that by 100, 1,000 processes per month or per week, and it really adds up.
What about your company, Everett? I believe you raised the Series B going all the way back to December 2021. Do you have any more financing needs or capital needs?
We raised a meaningful Series B at the end of 2021. We were backed by amazing investors. We're continuing to put our heads down and build.
All right, Rose CEO Everett Cook, thank you very much for your time. Now, coming up here on Bloomberg Technology, it is our VC Spotlight. Sarah Guile, founder of Conviction AI firm, very focused on artificial intelligence, software 3.0. She's going to join us next. Familiar face here on Bloomberg Technology. This is Bloomberg. But before we go, quick look at shares of Block, trading higher by about 0.5 percentage point ahead of some key numbers. This is Bloomberg. Let's shift the technology focus 7,000 miles east to Israel. We've just been speaking exclusively with Prime Minister Benjamin Netanyahu about the nation's status as a tech hub. He says his government is working hard to benefit from the AI boom. Have a listen.
There's noise in the short-term markets. There's clarity in the long-term markets. I mean, now Amazon just invests $7 billion in cloud services a year. Why are they doing that? Because they know something I'm going to do. What I'm organizing is government policy and a government board with money to make Israel one of the 3 top AI powers in the world.
That was Israel's Prime Minister Benjamin Netanyahu speaking with us this past Sunday. Let's keep the conversation on AI going. In today's VC Spotlight, joining us this Monday, Sarah Guile, founder of Conviction, an early-stage venture capital firm focused heavily on AI and software 3.0. Sarah, of course, a former partner at Greylock, described as, quote, overly direct, and also the co-host of the No Priors podcast. Welcome back to Bloomberg Technology, Sarah.
Good to see you, Ed. Thanks for having me.
So I want to start on a data point that we've been going over a little bit on the show this past couple of weeks. In the first quarter of the year, at least, almost half of venture backing for AI startups went to startups here in the city of San Francisco. Do you recognize that as being a genuine trend, the concentration of AI talent here in the city?
Yeah, I think it's a reflection of how early we are in this market. There is great engineering and entrepreneurial talent all around the world. I've been on the boards of startups, with Israeli founders, European founders, all around the United States. But at this particular moment, AI and this generation of it is very early, and a lot of the talent that was sort of working on the frontier of this technology was focused in a few large research labs. And those labs were staffed in San Francisco and London mainly. So I do think that, the AI boom has benefited from that research talent and is partly also to do with sort of the renaissance of San Francisco.
I ask you that because you and I have spent time together in your offices. You launched Conviction and you opened a physical office space. But since last we spoke, you also launched Conviction Embed, essentially an accelerator for AI startups. Tell me about that. What prompted the move?
So we think this is a unique moment in time. As we were just talking about, this is a very early stage of the AI market. And we want to bring people together at this frontier of technology because we think they are solving a lot of new problems. And some of those problems are very common, right? And so an example might be hardware and infrastructure is hard again for startups. Thanks to the cloud players, they haven't been hard for most startups for a long time. But if you are a company that needs to train or serve your own models, that's very challenging, right? And so people talk about the AI GPU crunch. And so one of the things that we were really trying to do is focus on the set of challenges that AI native companies face bring people together who want to work at the vanguard, and then also make it possible for companies to experiment, right? And so we're giving people enough capital to get going, $150,000 on very friendly terms, and then partnering with Microsoft, OpenAI, Anthropic, and Base 10 in order to sort of make it possible for people to experiment as well from the hardware side. And so I think it's in part because we think this is a really special moment in time. We want to bring together some of that vanguard community, and in part because we think we can bring our network together and people will solve unique problems together. So today's actually the last day of application. So AI entrepreneurs, I hope you'll apply.
Well, let's linger on that for a moment then. What is it that you're looking for? You know, if you are going to get a new wave of applicants that are watching Bloomberg Technology right now, how do they set themselves apart? What is it you're seeking to unearth?
Yeah, I think the fundamental thing that we're looking for with any entrepreneur, besides the core entrepreneurial traits of, grit, the enthusiasm and deep understanding of a particular problem space, is actually experimentation today, like openness to new ideas and new experiences, and I think a more expansive view of the markets that can be disrupted with AI, and then sort of deep understanding of how the research and technology apply. I think one of the most exciting things about the opportunity to us is the fact that we don't look at the markets that are available to AI as just traditional software companies. Like some of the most interesting companies in AI today, and I'm biased because these are some of our portfolio companies as well, but if you look at companies like Harvey in the legal space or Midjourney in the image generation space, those were not hotbeds for software innovation as verticals prior, right? And so we're really excited about people who, are experts in their domain and then also are thinking creatively about these applications versus sort of just expecting that these next generation of companies will be a direct replacement for incumbents.
Conviction's really focused on the early stage, but, I know you and Elad on the No Priors podcast have names from the world of AI working at some of the biggest and most mature technology companies to discuss some of the broad themes. What are the advantages of focusing on young, early startups rather than, those more mature, sometimes mega cap tech names that are still pumping money into AI development?
Well, I'm sure there's an updated increased number for Q2, but I think your viewers would definitely know in Q1, a fifth of the S&P 500 mentioned AI in their earnings calls, right? And so I do think since the starting gun of last November, technologists at companies of any scale recognize the opportunity and the risk. And definitely some are benefiting from it, right? We see even in our me and Elad's more advanced portfolios or even in public companies, there are founders and CEOs who are taking advantage of the opportunity and motivating their teams to work with more speed and velocity than they ever have. Incumbents have always had the advantages of distribution, like relationships with customers, and then like very, large resources, right? Engineering teams, access to infrastructure, for example. But I think these times of massive disruption are actually more advantage to startups. I think there's a lot of discussion amongst investors about access to data to train and fine-tune models. But the data you want for model fine-tuning and training is actually very specific, and incumbents often don't have it. So I think it's a race like many other technology shifts where startups are trying to build the best product and build distribution. And incumbents have the distribution advantage and are trying to figure out how quickly they can adapt to this new change.
Last October, you came out and confirmed your first $100 million fund, and you got going quite quickly. And we talked about the physical space that you have, the offices, but just share with our audience, Sarah, what it's been like building your own firm from scratch, where you've been able to make progress quickly, what the challenges have been as well.
Yeah, I am reminded what it is like to be a founder. It's a lot of work, I'll be honest, but I'm really excited. I think the timing of our fund launch was, we launched it publicly last October, and ChatGPT was released to the public in, I think, November. And so I can't say I was not surprised by how strong the consumer and enterprise reaction was to that, where like this is the race year to incorporate AI into your existing products as an incumbent company, right? And so I'm positively surprised by how many entrepreneurs and how much great opportunity we are seeing. And I think we have a reputation for domain expertise and network here, and we want to go work with some of the very best companies, and I'm very proud of the entrepreneurs already in the portfolio. But I'd say the amount of opportunity is also a challenge, right? We're hiring investors, and I think it will only grow from here. And so I'd say perhaps the challenges look a little bit more like any scaling company that doesn't quite have enough people because its market has arrived quickly.
Sarah Grau, Conviction, it's so great to have you back on the program. I guess the digital coalface of building a venture firm, but also investing in new companies in the field of AI. Thank you very much. Now, coming up here on Bloomberg Technology, we're on the cusp of the iPhone 15 debut, and Apple finally admitted last week what's been clear for a little while. The industry is facing a smartphone slowdown here in the United States. Bloomberg's Mark Gurman's going to bring us the details of his latest Power On. Take a look at shares of chipmaker AMD, moving to the upside, up around 1.2%. It's interesting. They reported earnings August 1st, then had a little dip. Morgan Stanley came out with a note saying that the post-earnings drop is a buying opportunity, and then you see some momentum in that name. They're building a reputation as an AI play, not just NVIDIA being the only name in town. One to watch. This is Bloomberg Technology. As the iPhone 15 debut approaches, Apple finally admitting the industry's facing a smartphone slowdown here in the US presents a challenge for the next iPhone, which promises to be the biggest update to the device in 3 years. Here's to unpack more. Bloomberg's Mark Gurman. And Mark, you wrote in your Power On over the weekend, actually, some new details about the timing of iPhone 15. We're expecting an event, a launch. When do they take place?
I'm expecting Apple to announce the iPhone 15 the week after Labor Day, so either on Tuesday, September 12th or Wednesday, September 13th. The phones will then go on pre-order that Friday, and then the week after, the following Friday, on September 22nd, I expect the new models to go on sale. Now, this is not necessarily groundbreaking. This follows the cadence of typical Apple releases, but notably, this event is happening about a week later than last year, but it's still within their normal time frame of early September to mid-September.
The question, before we get to the comments from executives about a slowdown, is what is the iPhone 15 going to bring us? How is it different from prior generations based on your reporting?
Yeah, I think this iPhone 15 launch is actually going to be the most significant upgrade to the iPhone since the iPhone 12 launched in 2020. You know, typically they've been doing bigger upgrades to the Pro phones the last few years, and that will continue, but the baseline iPhone 15 will be a pretty nice update as well. So I'll start with the cheaper phones. The 15 will get the same 48 megapixel back camera that the 14 Pro got last year, so a really big upgrade on those lower end phones. And then they're going to move from the notch to the dynamic island on the 15 and 15 Plus as well. So that's going to be a nice improvement that people on the Pro phones got last year. Now, moving on to the Pro devices, there's going to be an entirely new design. They're going to keep that sort of matte frosted glass back, but around the sides of the phone, the band that goes around the phone, right now it's sort of that shiny, fingerprint full stainless steel band, right? That material is changing to titanium. It's a brushed titanium. It looks a bit nicer, a bit more premium, but it also could make the phone a bit lighter. There's also going to be a much thinner border around the screen.
All right, Bloomberg's Mark Gurman, check on Power On. Executives saying 2 quarters of slowdown in the US. Does the iPhone 15 change the trajectory? That does it for this edition of Bloomberg Technology. Coming up in the next hour, Kathy Wood of ARC joins the crew on the 1 p.m. hour. From San Francisco, this is Bloomberg Technology.